Hey guys, I'm sorry to be releasing this so late. This is John Kirby. My co-host is Vic. This is the Bear Trap Discord podcast. All charting credits go to Auk. I think we might also have a couple of Gamma Edge charts in here. This is just a conversation that I had with Vic over the weekend, and we're basically just planning for the week. That's why I'm saying I'm sorry I released it so late. It turns out that we did a pretty decent job looking ahead at this Vixpiration today. And yeah, I don't know. I hope this is useful anyhow. And enjoy, share, like, subscribe, etc. All right. See you guys soon.
VIX hasn't even been able to go up. So yeah, I think your Santa rally idea probably starts Wednesday.
Yeah.
Once all that positive GEX goes away, I mean, who's gonna do people roll into January, or do they just go, let's just roll into March?
Wait, when you say where are you seeing the positive GEX? Because if I look at SPY or whatever, I
On
mean this is
VIX.
actually on the VIX.
Yeah.
Yeah. There's way more at the 30 strike. In fact, that was one of the strikes with the most volume in the entire trading day.
Yeah, in the 30s, but
Friday.
that is in the 30s for Wednesday, so which is what, the 21st, yeah. You can see the put call ratio 0.39. That's kind of high. I mean, as far as calls to puts.
Yeah.
So demand for SPX puts is on the higher end. I mean, that's basically how I read it. But the VIX hasn't been able to even really go up, and that may be because there's a lot of negative GEX too down below it. So it's just kind of pinned. It's hard to tell which way it's going to go. Most likely, I think the VIX goes down on Wednesday.
Yeah, I mean usually I think well, this is actually really tricky because I'm used to seeing after VIX expirations to get a sell-off, right?
Yeah.
Because a lot of times these puts down here will actually act as things that are pushing the VIX down and suppressing volatility,
Mm-hmm.
especially into that VIX expiration. But the thing is, I think Paul was kind of right on the last podcast where we were talking about how like the SPX expiry last week, because all the risk events were concentrated there,
Yep.
um, actually acted as that VIX. So I think we almost have to be in the mentality of this VIX expiration is almost like those, like you're saying, like those calls expiring are actually more relevant in a weird way than these puts
Yeah,
over here.
no, you're right. And the other thing too is why I think that is because they've been there longer. Those puts have not been there that long. That GEX has not been there as long. Because I mean, I've looked at this every week, almost every
That's a
day.
really good point. Yeah, they just came. You're right. I mean, those guys all just came on, and they just started to become relevant as well.
So what's going to be more relevant is the call supply versus the put supply. The VIX, I think the call supply probably outweighs it, just given that put call ratio. And so, like, if you could watch the VIX trade on the tape as far as the puts and calls, what's more likely to be getting liquidated? Which side? Probably the calls.
I think so. Yeah, I think if you're in those 30s right now, you want to get out.
Yeah,
Um,
you're selling them or rolling them or whatever it's going to end up
oh, okay.
happening is
Here,
going to be.
here we go. Do you see this?
Yeah, the open interest. So yeah, there you go. I mean, so there's not a lot of gamma exposure on some of these, but there's definitely a bigger call supply for sure.
It's huge. I don't look at this all the time, but I mean, this to me looks just like a lot of calls on the VIX. And the 70s getting hit up there, like, okay. Um, I saw there were like a lot of like the 75 strike for like March on the VIX was really popular last week as well.
For March. Yeah,
Yeah.
March. So what Jem always talks about is just this seasonality with vol happening right after that February OPEX. He was like, yeah, the COVID crash happened pretty much the day after February OPEX, and it wasn't a coincidence.
No, yeah. Brent Katuba, the Spot Gamma, did a really great episode on that on the Market Huddle actually, and
Really?
it was the same precise point. It was like, hey, we had COVID, and everyone was surprised that the market wasn't falling sooner, and then suddenly we had that VIX-X, and it let everything just unwind, and
Yeah,
that's when they
and the
started to sell
dealers
off.
were off sides essentially, and it sent the market for a tailspin while the dealers were trying to get positioned. Um,
And I was actually looking over at I forget, I'm trying to find what I was looking at, but it was something that was telling me that we might get something really similar this time around because um
Similar to what, the COVID flush.
correct, yeah. Um And I'm trying to remember if it was VIX related or if it was just index GEX related. Um, Oh, incidentally, as we're at it, another reason I think we could get a pretty big rally here is so this is SPY delta hedging exposure, which is relevant, and this is 30 days. So the green you're looking at is the quarterly expiration, right? And everything else underneath the green is everything earlier than that. And we are under so many puts. This is like we're under everything. That
Right.
crash that we had towards the end of last week. This is a lot of people who want to monetize,
They could
especially into the 30th.
monetize. Man, I thought Tesla puts were going to monetize on Friday. That's why I kept saying, like, dude, Elon, do something, man, because you could send this thing to $200 like in 2 days.
Well, I think that's why Tesla was holding up better than the broader market. Not on Friday, but on Thursday it did.
That's what I thought too. And I was like, okay, cool.
Yeah.
Maybe they are setting up for the squeeze. And then it ended up going down again. And I'm just like, okay, there's some crazy distribution going on. And these guys are not monetizing these puts for a reason.
I almost think that the reason it didn't fall harder is because they were monetizing, and then it's just that you're getting all these bearish flows coming from like all the indexed products, and so that's kind of canceling out the effects of the monetization.
Well, based on that little moneyness chart, it doesn't really look like there's been a lot of monetization.
That's fair. That's a good point.
And the other point is Tesla was severely underperforming the SPX. If you just look at it from a tape perspective, SPX jumped like 40 points or 30 points in a short period of time, and Tesla barely could get up $1.
Okay.
So and there was just a ton of open interest in GEX on that 150. So I think it was just a super magnet for that Friday. And given all the overhead puts that were in the money, there was no way I was going up, which again, I thought in the morning, I was sitting there going, okay, cool. Tesla is really ready to spike, and it just needed to hit like 164 to really send it. And it could just barely get to that 162. So even though Elon may step down as the Twitter CEO, we'll find out tonight. I don't know I think Tesla may gap up, but it probably gets sold again.
Yeah.
It just kind of depends if it can hit those key levels and really kind of start the domino effect. But yeah, in your case, you're talking about here with all this delta. Really, you just got to find that key level and go, okay, well, if we are going to start the unwind to the upside, where is that going to happen? What level do I need to watch?
No, that's a fair point. And I think, to the downside, it seems like you see this bar right here?
Uh-huh.
You know what that is, right? That's the JPM collar.
Yep.
It's right there. It's hard to see us not coming down to touch that before we do anything else because we're so close.
Yeah, and I felt like that's what a lot of the action was about on Friday too, was messing around at that level. They came right down to it. And
did we actually touched it, right? Because if
they went under it for a bit, I think they went to like 26 or something, and then but it was basically at the 35 spot.
Do you remember when those actually expire?
To be honest, man, I thought they expired Friday. But
if they didn't expire Friday, then by process of elimination, it has to be the quarterly. They have to be expiring.
That's
on the
what
30th.
Ox said. Ox said it was the quarterlies. I was talking to him in the chat, and he was saying he thought most of it was on the quarterly. So that explains why it's here. Is this an updated chart?
Yeah, it should be. The issue,
that would explain why it's there.
Unless, these are charts that I pulled right now. Unless ROI doesn't update until Monday morning, which would suck. But
well, the bar color, what is that color? Which expire is it connected to?
It is indeed connected to the 30th. Yeah.
Yeah, so that is going to be the quarterly. So yeah, those are out of the money. Those are in the money calls essentially against JP Morgan. So they have an incentive. I was thinking about it. I was like, well, are they going to have enough power to push it down? But I think that just the size of the trade is going to push it down. If they monetize it, then I think that rips it, doesn't it? Or no? Or does that pull it down?
Well,
if they monetize it, it pulls it down, doesn't it?
If they have, so JPM is short the calls, right? Which means that a market maker is long them. If JPM closes the calls, it means that they are
Well,
buying calls.
JPM's not closing the calls. It would
Oh,
be, or I guess they could. I guess they could buy them back.
no, but they would, that they're not, like, contractually, you're right, they can't do that. Like, they just have to keep it open until they roll, and
Whoever
they'll
they
roll
s-
it at some point.
whoever they sold them to, that's what I'm thinking of. Is if they sold them to somebody and those folks start monetizing them, then you're in a situation where, like, if you look at those moneyness charts, then it pulls it basically creates a lot of negative delta pressure.
That's true. Yep. That makes sense.
And so if
Um,
your Santa rally is real, then you're betting that these folks just sit here on these in the money calls into the end of the quarter.
well, there's
So
no way that that's gonna happen.
there's your risk is, okay, am I gonna bet on a Santa rally when all that needs to happen is these whoever owns these calls here at 38, 35, that they don't monetize.
Hmm.
I don't know. I mean, that's just a thesis that you can run with for part of your analysis. The other
Well,
side of it is the VIX side of it.
I just think that after that sell-off, and okay, so look, this is the SPX delta hedging exposure, and you're right, we are sitting above those calls, and but I mean, they're actually outweighed by all of the in the money puts right now.
So your big strike then to the upside is the 4,000, which is definitely possible. Because once you start hitting those mini levels like the 3,900, it's probably a quick burst to 3,920, so on and so forth. It starts the domino effect to the upside.
Yeah, I want to
This
actually, what I want to do is I want to pull up the GEX first and then look at that chart immediately afterwards. So like this is okay, so like yeah, this is SPX and GEX right now, and then I'll do SPY directly after this. And the thing is that look at this laddering on the put walls down here. And you see like that actually, those are actually put walls, right? In other words, it's going to be each time we pass a level, it actually doesn't, passing the next level is not going to get as easy because the lower levels are bigger than the higher levels.
right. So the
So
imbalance is to 3,800 right now.
yeah, exactly. Like it's and then at that wall, that the biggest wall is at 3,800, meaning that like every time we pass one of these guys and get to the next one, we actually need to add additional sellers in order to be able to push the price even further down. Um,
Yeah.
does that make sense? Like, because each one of these
Yeah.
is kind of acts like it's blocking us, blocking us, blocking us, blocking us. Um, And so then, okay, let's do the same thing on SPY. And then what I want to do is I want to look at the GEX first. And so we'll do our like case by case interpretation on the GEX, which is kind of the near the money stuff.
Right.
And then after we have those scenarios nailed down, we'll go to the DEX and see, okay, once we get past these levels, what does the DEX do?
Yeah.
Um, that's how I'm thinking about it. Okay,
Okay.
so then this is the SPY net GEX right now. And honestly, I would say it kind of looks, I mean, the same, except just that there's nothing until 380.
Yeah. That looks pretty clean into the end of the year. Basically, it's 375, 380. It's like if I just look at it and I just go like my quick glance, it's 380, 375 into the end of the year.
Yeah,
Unless this distribution changes up somehow. How would it change? We'd have to probably get up to that 390 again, and even up into that 400 again. Like right now, you got to get to 400 just to become like maybe positive GEX. You're in a
250.
severely negative GEX situation.
Y-
It's tough to be a bull here, to be honest.
Yeah, I mean, the other thing to mention here too is that like even though the SPX looks pretty clean in terms of stopping our way down, now that I'm looking at the SPY, and like look at this axis, right? This is negative 50 million here.
Yeah.
And where everything's just about under negative 50 million, then you look at the SPY, and as usual, it's way more. This is a 250 here. So
Yeah.
it almost stands to reason that we should be looking at the SPY more.
You
SPY is
should.
pretty clean to come down to 380.
Yeah.
And
I mean, at this point, it looks like SPY's closing tomorrow 380, which would coincide with SPX 3,800, which Where'd we close at? 38.52.
I don't know if it coincides with 3800 because look, right now the conversion's 3852 on SPX and it was 38255.
Oh, so it's like 25 points off.
Yeah,
Okay.
it's 25 points off. So I would
So maybe we're right under the JPX collar is where we're
exactly.
closing. Yeah.
Yeah,
That
which
lines
makes
up.
perfect sense.
Yep.
Yeah.
And we continue. So that would cause pressure on those in the money calls if we're closing underneath their position, because man, how long have they had those open for? 2 months, almost 3 months now, and they can't be worth a lot right now. If especially if you're right at it, they're going to be losing money pretty quick if they're not in the
Yeah.
money.
So
I
I
would
mean,
think.
it's not unreasonable to start to think that maybe yeah, we basically come down to 380, chop around a little bit, and then make another path to 375 after that.
That would be
Um,
my low for now, is that 375, just given that that's where the big quarterly is.
but it's
Let's
also it's also not like a surprising thing, a surprising level right now. You know what I mean? Like I
Yeah.
think if we did do that, we're just like kind of grinding and chopping. It's not like a
Oh, it's gonna be torture, dude. This is what Jem said too. He said he said he's basically bearish, but it's not like super bearish. He's just like it's gonna be a sideways to down, fall down, market down. And that's just
yeah.
exactly what we're seeing here, where you're gonna see vol come down because of the expiration, but then the market's also set up for down too. You're not gonna get a
It,
big VIX crush, vol crush, because there's there's just not a lot of room for it to go down. It's
I
going down to
I
like 21 or something.
I think that makes perfect sense. And also, I mean, um, there's no big, super big expiry upcoming relative to what we just had. That's going to all of a sudden force people to
Right.
be
Yeah.
monetizing their puts.
Yeah. 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 There's not a huge amount of flow coming in here into the end of the year. And more or less than anything, I guess it would be tax selling, right? Folks harvesting their losses.
Yep. Yeah.
And so you actually have more negative flow coming in. Something he said interesting on the podcast that he just did on Saturday or Friday. He said something about, and this is something I wanted to bring up before, was the amount of money that moves the markets is really small relative to
Hmm.
the size of the market. And they were referencing that big, like 5% move in the Qs,
Hmm.
a couple weeks ago or a month ago or something. And he said the amount of actual money that moved the market there was $1.6 trillion gained on that move as far as like market cap, but the total amount that moved it was like 100 billion.
Jesus.
And then it all came off. And he was just saying like the actual value of the equities market and total market is like 450 trillion, but the amount that moves the markets every day is less than 100 billion.
Yeah.
And so basically his point is like the liquidity in the market right now is just gone. Basically, it's just dwindling. And it doesn't take a lot for these big whipsaws to happen. So it's hard to be in the market. I think a lot of smart money knows this probably. So again, to my point is, if that is the case, if all that is true, then it's hard for me to not see negative flow coming in just from a volume perspective.
Did you feel, so I remember last week I was trading futures and this one time I got stopped out was it was sort of like the market was trending up and then we got and I don't know if it was my internet or it was the market, but I think at this particular instance it was the market. And I just got immediately stopped out and the market was back where it was. And it was so fast that I had no time to react or like nothing.
Was it a
Um,
was it a wick, or did you not even get wicked out?
I didn't even see a wick. Like it just flashed. It was one price, then it was the other price, then it was the same price again.
Yeah, I mean, I've
Uh,
seen I've seen that before. Yeah, lately. Yeah. I mean, I'm not surprised at all. Um, those that's kind of, I've been not really wanting to trade futures a lot either. If I do, it's like I'm trying to pick and choose my moments, because these whipsaws they make me nervous, dude, because of that right there. It's like as soon as I feel like I put my stop in, they go right for it. I'm trading one contract MES here, and they're still going for it. And
Yeah.
so I don't know. I don't know if that has to do. It probably has to do with what the
No, it does because here's
yeah.
the thing, like if you're not involved in other instruments, then your hedging obligations go down, meaning you're not providing as much liquidity to the futures.
And that's such a good point too, because of the I've been looking at these GEX charts and they just look anemic, if you
Hmm.
know what I'm saying. Like it just I was looking at Tesla. If you look at Tesla's GEX, I might pull it up here for you, but it's there's nothing there. And it's sort of what I saw right before the CPI recently, right before the FOMC. There was just no gamma. I know the scaling's a little off, but I mean, just relative to how long I've been looking at these charts, it just looks like there's just nothing. So it's just an interesting
Oh
thing
my
to
God.
note. It's just an interesting thing to note going into the end of the year, or maybe even if we see another situation like this in the markets at some point where it's just like there's no hedging going on, there's no new positions being put on, there's no trading going on. You got these huge vacuums in the market right now. Vacuum meaning like these just air pockets where the market is just going to go from one spot and it's going to flash to another spot and sit there for a bit. And so it's just going from value to value. And so that's kind of the key, is finding the value, like where you think the next value area is. And but it's hard to trade that, in my opinion, because it happens so fast. And as soon as the move is over, you get in, then you're way too late. You can't catch the continuation because it's just going to sit there.
Yeah.
Anyways, that's just kind of a side note. But as far as what I've noticed watching these, there's no GEX anywhere to speak of, except for in the VIX here. There's not a lot of GEX in
Yeah.
the SPX. There's not really a lot of GEX in the SPY. It sort of reminds me of like end of day SPY, where you're just going, oh well, it's going to 395 because that's just for the, it's just gonna. That's just what it reminds me of. It's the end of the year version of an end of day SPY chart.
That's a good way to put it.
Yeah, and so you're just going, well, we just got to sit here and wait for this thing to grind its way down to 375, and then right back to like 380. Might overshoot it a little bit, and then it'll come back down to 380, and you're just gonna get
Yeah.
this garbage action and no trending. So I think there's a lot of opportunity in the zero DTE world, where if you kind of know where your edge cases are on the daily basis, you can definitely still make some money like in SPX. But as far as like trading a wider range or trying to get out of the money stuff to hit, at least on SPY, it doesn't look really that promising to me.
Oh, wow. This is a bleak podcast today. Okay.
I'm not trying to be negative. I mean, what's good about it though? Okay, let's look at the silver lining. Is once this little period is over of pain for traders, is really what it is. People that want to see some movement, then it's going to get really good. I think after and what Jem says, after January 10th, you're going to start seeing some money coming back into the markets.
Hmm.
He had a really good point. He said every year you had this $450 trillion market with everything all added up, and in general it makes like 10% a year in earnings. I don't know if that's going to be the case this year or whatever, but that money has to go somewhere. So 10% of 450 trillion, when the markets move on 100 billion, then it has to come into the market slowly. But if it's coming into the market, you're going to have positive flow. So I think his case is basically beginning of the year, you're going to have some really nice rallying going on.
It's not unreasonable, especially when you think that right, like so we had this move happen where we were noticing that a ton of people were in puts for I think like early December. They didn't pan out. Then everybody started buying puts for next year, but they kind of skipped the end of December. And so, but most likely there's going to be some FOMO slash fear now. And so we're going to get enough puts to juice a rally. And then also we're going to stay there and vol's going to come down enough that those puts are going to start to lose value and properly act as fuel. and then the timing of that seems to work out, and then also it'll screw all those put holders for
Yeah.
early next year.
Yeah, and that makes sense that people are going to be early again.
Yeah.
They're going to be early again, and they're going to be early into, you know how like every month for a while there you had the beginning of month flow where it was like called it the 401k flow or rebalancing or whatever.
Hmm.
I think that's going to happen at the beginning of the year. You're going to have a similar type of situation where you're just going to have all this money just coming into the market. I don't know where it's going to come into. Is it going to come into equities, or is it going to come into a certain part of equities? It's going to go into bonds or whatever. Probably into stuff that earns a yield. So like energy or banks or, bonds. And so you're going to see all that money kind of try to find a home. But that'll probably spark some short covering and some rally and some stuff. And some put covering. So
No, I mean that lines up too, and then that the January 2023 VIX-X is on the 18th, so we got a
definitely
good.
keep that date in our minds. I don't know why he chooses January 10th as his particular date.
It's a weird ass day. Yeah.
I've been trying to figure that out. I haven't looked into it too much, but that's right before that Wednesday VIX-X. Because there's a VIX-X every week, and it's not the big one. So maybe we need to take a look at this January 11th VIX-X and see if there's something special about it. But to figure out why his timing is the 10th, he kept saying it, the 10th.
That's very weird. I'll have a listen to that. I haven't listened to that podcast yet.
Should, man. He has
see.
As usual, he has a lot of really good points about just everything, macro and some really good ideas. Like he's talking about buying longer dated gold calls. Thinks they're super cheap.
He talked about that on a previous podcast as well.
So definitely go check out the Top Trader podcast. The most recent episode is free, and you got Jim talking about selling longer dated oil puts to fund longer dated gold calls. That's a trade he really likes right now, which it makes sense. The reason he says it is because you got a federal government put on oil right now. So because they said that they were going to come in and buy oil at 65 or $70 or something. So
I mean, in theory, they should be. What's WTI at right now? They should be bought, or is it at 75 right now?
it was at 74, I think, last I looked.
Oh yeah, 74.
So coming in and just being like, okay, cool, we'll just sell puts, get the credit there, buy this inflation hedge on these longer dated calls, and because they're cheap right now, because it's basically like it's you like it. It's such a good podcast because he likens it to this put trade situation where it's like people that were buying gold for the hedge, also that didn't pan out.
Hey, I was doing that.
Yeah,
and it's doing fine.
Is it? Oh, good. Well,
no. It depends where you bought gold. Like I started getting in, at with GLD at 165, and then it came all the way down. I don't know. I've been trading options on GLD for months now.
Really?
Getting positioned. Yeah, and I'm sad I missed some of that up move because I had a ton of short puts and I made a lot of money on those. And then I had I'm holding a short call at like 159 or something right now in GLD. This always happens to me. I always get offside on the short calls.
I think you're fine. He was basically saying it was just a crowded trade because gold, everybody thought inflation was going to go crazy, so everybody thinks gold was going to rip, and then for some reason it doesn't, and that's just because everybody's in it. And then the other side of it is gold doesn't have a yield.
Yeah.
So if you're really worried about inflation, or you and gold's not performing, then your money is finding a new home and stuff that actually earns a yield. But that's why he was saying longer dated stuff, not anything near dated. He was just saying get into the leaps essentially on that, and then fund it with the selling of puts on oil.
No, it makes sense. I would wait a little bit. I do personally think that because like you're saying, gold is such a crowded trade, it almost feels like all of a sudden it started popping onto everybody's radar. And I remember they were saying like everybody doing the podcast runs was like, oh, gold is dead, it's not working. And now all of a sudden they're all talking about how it's working, which to me says, okay, now it needs to fall a little bit.
Yeah. I know, and it's weird how it works, and I just thought it was funny because he likened it to these folks in puts, and the underperforming vol that has been occurring for a while. And it was just like the same situation. Everybody's just crowded into it, and it just becomes oversupplied. And you got to wait till all the supply runs out and before it becomes good again.
Yeah.
So I don't know if you could pinpoint when folks are finally done with the gold trade, you could probably find a really nice rally in gold at that point. Similar to how we're always trying to look for when, like with VIXX, when the moment when everybody's kind of done with the downside on the SPY or the SPX. It's probably a similar type of situation. But I really like the selling of puts in oil because he's right. It's like you used to have this Fed put on the market, which is gone now for the most part. And so it was just like you could just sell puts and earn a living that way. And now that's in oil because the government's sitting under it.
Yeah.
So it's like the safest trade out there is just selling puts in oil for the most part.
Yeah, I mean, unless the Fed put suddenly gets removed or you get some sort of an OPEC something, but I do doubt that OPEC is like they're gonna have a lot of trouble radically increasing supply in any way. So I do think you are pretty protected there. What is interesting is that, all the downside from on the oil, I think, is just coming from recessionary fears, right?
Yeah. I mean, and the recession, that's another topic too. You really got to listen to that podcast because he's talking about the recession being the worst case scenario being a shallow recession where it happens quickly and it's not that big of a deal. So if the economy is strong and jobs are holding up, it's actually the worst case scenario for the stock market. And the best case scenario is for a big nasty recession.
No, that actually makes a lot of sense because I mean, like the one triggers the pivot, right, and the other one doesn't. So
the other one doesn't. So yeah, and so then you get this grind, and there's a lot of uncertainty. Yeah. So and unfortunately, his case, his most likely case is a shallow recession at this point, and that makes sense too, given how strong some of these. Like you look at the data every week, and you're just going, well, jobs ain't really doing much. I mean, sorry, my daughter is hacking in the background, but
no, I could hear it. I feel so bad, man.
sorry if you're hearing that. It's going around here, but he was saying, if you look at jobs and data and stuff, it's just every time I look at the jobs data, I just go, well, I mean, people are holding their jobs for the most part, so where's the pivot going to come from? Why would they pivot? Continue hammering, growth stocks, continue hammering those rate hikes, and continue selling off your balance sheet.
Yeah,
the market can handle it right now. The economy is strong enough, and they're basically the Fed's getting their way out of it based on how the economy and everything's holding up. So it's an interesting situation where everybody's kind of looking at, I don't know if everybody's, but what I see on Twitter is the economy is broken. The economy sucks. And I'm going, I don't see it. At least in the data, some data doesn't look that great, but for the most part.
And imagine what the hell is going to happen with oil once the recessionary fears start to go away and we have the China reopening at the same time.
Yeah.
Like, geez.
Yeah, and so that's some stuff to consider with your trading strategies and stuff. But for me, I'm just looking I'm just looking 2 weeks out at this point and starting to think about a potential rally. I want to start looking at the data and seeing if that comes true. If I start seeing it into the second week of January. I
mean, there is a case to be made for this. That's, I think, maybe something I was looking at, the December 30th expiry. At least, the SPX open interest is still full of a lot of puts that are pretty far out for December 30th. I think I have SPY on here as full of the same thing. Let me see if I can find that.
Yeah, but there's the other thing too is it already hedged essentially? You know what I mean? Like, is it already taken care of? Because it's been there for so long, and I think there's a lot of supply there, so that may be what it might support the market for the most part.
Exactly. Yeah, that's what I'm saying.
But I don't think it's going to cause a squeeze or anything. I think it's just going to
It's
be
not yeah, like you said, it's pretty thin. It's not enough for that.
Yeah, you look down there and you go, well, there's just going to be a bunch of call selling into the end of the year. That call selling is going to hold the market up, but it's not going to be enough for a squeeze. So that's where you're going to get that frustration where you're just going, golly, can this market just do something cool, do something interesting? And it won't. It's just going to grind.
Well, it's funny how those trades, like selling volatility, has been so profitable lately, despite the fact that we're in a bear
Yeah.
market.
Yeah,
Um,
that is the
yeah,
trade right now.
yeah, and I mean, what I got lucky with, right? Because I got out of all those short vol positions. I mean, a lot of them I got out of at 410. I started getting out at 400, then I got out of more at 410, and then on that pop that we had off of CPI, I got out of the rest of everything. And now that we're down here on Friday, I sold an Amazon put again. So
Yeah,
I just kind of started
interesting.
back up again.
Yeah. So what made you start up again? Just this kind of this idea that it's short vol is just where you want to be. It's just the trade.
Yeah, I mean, let me think about it. It was kind of like we sold off so massively over the last few days that I think that there's a break is in order, and I have too many short deltas in my portfolio, so it just felt like time to start making a change.
Yeah.
Okay, all of that being said, now that I'm looking over here, so what's interesting is when I pulled that SPX chart, I did not pull including January, and you can actually see now that this is the SPY open interest, and then if we look at the bottom at the puts, so much of the SPY open interest is in January right now. It's like everybody's already moved over, and the December 30th, like there's a pretty thin amount of puts down here. I mean, they're still down here, but it's not super significant. So I think it's consistent with what you're saying that, they'll just kind of keep us up a little bit and maybe grind down slowly. And then January is where we're really going to start to get the fireworks. And it's amazing to me how many people have already rotated to January, I think.
Well, if you think about it, man, like you and I and the Bear Trap and even Gamma Edge, I mean, we're late to the game, even though we're ahead of most people, I think, in thinking about this kind of stuff. I mean, big money's been probably thinking about this 2 quarters ago. You know what I mean?
Yeah.
They had 20 analysts that are seasoned vets that are already thinking about this kind of thing. So, yeah, I mean, that they're going to be already kind of leading the pack there, but as long as we're on the right side of it is all that really matters. As long as our thesis is kind of aligned with what the data is saying, it should be fine. So whether you want to short vol or, start buying some calls for January,